The 3 best long-term stocks you need for your June 2022 portfolio. The current bear market is one of the most challenging periods for investors. Many are scared to invest in the stock market and are looking for alternative options. While the current climate may be risky for some, it is the perfect time to jump in if you are an adventurous investor. We're going to look at 3 long-term stocks that you should buy for June 2022. The market has been on a roller coaster ride for quite some time now, and it is not yet clear what will happen in the future. However, if you are looking for a long-term investment, these are the stocks that you should be looking at. MCD McDonald's $249.04 cost. Costco Wholesale $485. O Realty Income $68.18. McDonald's. MCD. McDonald's, NYSE. MCD, is an American fast food restaurant chain that was founded in 1940. It serves various burgers, sandwiches, chicken products, breakfast items and soft drinks. McDonald's has a variety of products on its menu, including signature items like the Big Mac and fries. However, in the last few years, McDonald's menu has been changing to include more healthy options. Hence, it is looking to address its biggest concern. McDonald's has a strong competitive position, and people eat its food even in the worst economic conditions. McDonald's continues to deliver excellent revenue, operating margins and free cash flow. In the future, the company could innovate with increased adoption of automation and new technology. Its success is built on a globally diversified menu that has attracted fans in every world region. McDonald's had a good first quarter with earnings per share, EPS, at $2.28 on revenue of $5.67 billion. Their numbers were slightly above what Wall Street was expecting for the period, which means they are continuing to perform well even during tough times. The financial results for the company for the quarter show $127 million in costs relating to suspending operations in Ukraine and Russia. Hence, the performance is even more impressive. One reason McDonald's is one of the best long-term stocks is its dividend. The company has had a strong history of increases for the last 45 years. What pays dividends are its strong profitability and cash flows, which make it a very safe investment. Costco Wholesale Cost. Costco Wholesale, NASDAQ. Cost, is a membership warehouse club that offers a wide range of products, from food to clothes. The company was founded in 1983 in Seattle, Washington, as an American membership-only warehouse club selling specific branded lines of general merchandise. Costco offers unbeatable prices and a wide variety of products. It has a very strong moat, because it has excellent customer service and low prices. It is a difficult company to compete with. The company is in a fantastic position during this period of high inflation. The combination of low prices and high quality has made Costco a very profitable company, with $51.9 billion in revenue and EPS growth of 36% this last quarter. Realty Income, O. Realty Income. NYSE. O. is a real estate investment trust, REIT, that invests in and operates income-producing commercial properties in the United States. It has been successful with investing in properties that produce high levels of recurring income, such as office buildings, shopping centers and medical facilities. A REIT is a company that invests in real estate and earns income by collecting rent from the tenants who lease the property. This can be a good way to generate passive income, because the company takes care of all the work involved with owning and managing property. The company has never missed a monthly dividend payment since its start, and its dividends have been increased 115 times. That includes 98 consecutive quarterly dividend increases. Realty Income has the financial capacity to continue capitalizing on this opportunity. It has one of the best balance sheets in the REIT sector and a conservative dividend payout ratio. On the publication date, Faizan Farouk did not have, either directly or indirectly, any positions in the securities mentioned in this article. The opinions expressed in this article are those of the writer, subject to the InvestorPlace.com publishing guidelines. Faizan Farouk is a contributing author for InvestorPlace.com and numerous other financial sites. Faizan has several years of experience in analyzing the stock market and was a former data journalist at S&P Global Market Intelligence. His passion is to help the average investor make more informed decisions regarding their portfolio. 03. How to make money, or even get rich, during a stock market crash. Nobody knows when a stock, or the stock market, has hit bottom. People can speculate, and every analyst hoping for a little bit of television fame most certainly will. But no person, no matter how many past predictions they claim to have gotten right, knows when a stock or the market has fallen as low as it will go. And, while it's tempting as an investor to wait for better prices, that's a dangerous game to play. Yes, you might get a better price by waiting, but you also may find yourself waiting too long and missing an opportunity. Down markets, bear markets, market crashes, whatever you want to call them, follow no rules. A market correction takes overhyped companies that have underdelivered down in value while also dragging down shares of strong companies which have performed well. As a long-term investor, your job, or at least the best path to accumulating wealth, isn't figuring out where the bottom is. Instead, it's sorting out the companies that have a bright long-term future, where today's price will hardly matter, from companies that saw their share prices drop because they don't have sound business fundamentals. That's not always easy to identify when you consider some examples. There are investors and analysts who feel both ways on any of the questions above. But, the best thing about investing is that you only have to put your money in stocks where you have deep convictions. The Street. What is a long-term investor? Long-term investors consider down markets as an opportunity to add to their portfolios. Before you can think about doing that, you have to think about what it means to be a long-term investor. A long-term investor buys shares in companies they intend to hold for years, essentially forever. Usually, a long-term investor has an investing thesis, a reason why they want to own the stock. That thesis should give the long-term investor faith in that stock even when the company's share price drops. Basically, a long-term investor checks in on their holdings to make sure the company has not made a change that causes it to diverge from that thesis. For example, did the CEO change and the new leader made a major change to how the company operates? Or, did something huge happen in the market that causes you to change how you see the company's prospects? Long-term investors understand that many companies, Amazon being the most famous example, don't manage to deliver quarterly results. Instead, their leaders make the best decisions for the company to succeed over decades, not quarters. That's why Amazon, to stick with the example, has been willing to have money losing quarters where it invests in the infrastructure it needs for long-term success. Scroll to continue. The Street recommends. Moves like that can send a company's share price down, but it's hard to argue that Amazon, and many other market-leading companies, are wrong to view their business as a long-term enterprise, not a quarterly exercise in releasing press releases. How do you get rich in a bear market? Down markets, bear markets, and stock market crashes put good companies on sale. If you have a company you believe in, and perhaps already own, you can buy shares fully believing you are making the right choice for your future, even if the bear market continues and stock goes down. Long-term means years, sometimes decades, and a share price falling because of market conditions or macroeconomic conditions allows you to buy shares and do what's known as dollar cost averaging. That's where instead of waiting for the best price, you buy shares as funds allow, averaging the price you have paid to own stock in the company. A falling market actually allows you to lower the average cost per share of your best holdings if the share price has fallen below what you first paid. The challenge, and it's a big one, is that long-term investing means you hold shares for a long, or very long, time. Right now, that may mean your portfolio has taken a big hit, but if you believe in the companies you own in the long run, then holding them and adding to those positions makes sense. And, while I am an advocate for long-term investing, I'm hardly alone in that, as legendary investor Warren Buffett has followed the same principles and has delivered some famous quotes on the topic. "Someone's sitting in the shade today because someone planted a tree a long time ago," he said. The Oracle of Omaha has also regularly said two other things that illustrate this philosophy. If you aren't willing to own a stock for 10 years, don't even think about owning it for 10 minutes. Our favorite holding period is forever. Does long-term investing have to be your only strategy? Of course not. You can also make money being a more active trader. If you want more advice on long-term investing, check out The Street Smarts, a product designed to help you get started and build a long-term mindset. And, if you want a more active approach along with that, or on its own, the Managed Portfolio at The Street's Action Alerts Plus gives you access to world-class portfolio managers Chris Versace and Bob Lang. So you can see how they make money during these scary times.